Breaking news out of Washington. The Social Security Administration has quietly begun issuing $3,200 correction payments to select SSI and SSDI recipients, and millions of people don't even know they qualify yet. Yes, you heard that right. Thousands of accounts were underpaid, and the SSA is now scrambling to fix those mistakes. Some beneficiaries are already seeing mysterious deposits, while others are receiving letters explaining unexpected adjustments. But here's the shocking part. Most people have no idea this is happening. No national announcement, no official press briefing, nothing. These payments are rolling out quietly, and if you don't take action, you could miss your $3,200 entirely. In today's breaking update, we're going to explain who qualifies, why the SSA even owe these payments, and most importantly, how to check if your payment is already on the way. And yes, some viewers may see more than $3,200 depending on their case. We're also breaking down the new internal audit at the SSA, the same audit that uncovered years of miscalculations, incomplete COLA adjustments, and incorrect income reporting that triggered these correction payouts. If you receive SSI, SSDI, or survivor benefits, this could be the biggest surprise deposit of the year. So before you check your bank account, stay with me, because you might be on the list and not even know it. This is urgent, this is real, and this is happening right now. So let's dive into everything the SSA doesn't want to publicly broadcast, including the exact steps to confirm whether your $3,200 correction payment has already been processed. If you or someone you know receives SSI, SSDI, or retirement benefits, this is one update you can't afford to scroll past, because what happens next could directly affect your next deposit, your benefit amount, and maybe even your eligibility for upcoming adjustments. This is the Social Security update everyone's been waiting for, and what I'm about to tell you might just surprise you. Now let's get into what's really behind these unexpected deposits, because while it may feel random, this $875 correction payment didn't just appear out of nowhere. It's tied to something that's been quietly brewing inside the Social Security Administration for months. An internal audit that uncovered widespread underpayments affecting SSI and SSDI recipients nationwide. Here's what happened. Back in late 2023 and early 2024, the SSA began reviewing its cost of living adjustments, or COLA, after several advocacy groups, including the National Council on Aging, raised red flags. They noticed that thousands of beneficiaries were getting slightly less than what the 3.2% COLA increase should have added to their monthly checks. The issue came down to rounding and regional calculation errors in the Social Security Administration's payment system. It sounds small, a few dollars here and there, but when you multiply that by millions of recipients and months of missed adjustments, it adds up to billions in total. By mid-2025, the SSA's Office of Inspector General launched a correction review. Their findings confirmed what many suspected. An internal coding glitch and misapplied regional inflation factors caused benefit shortfalls that hit Social Security income and Supplemental Security income recipients hardest. So in September 2025, the agency approved what they called the SSI and SSDI Underpayment Correction Initiative. The goal to restore the missing funds to every affected beneficiary. That's what's now being distributed in the form of these one-time $875 correction payments. Let's make one thing clear. This isn't a stimulus check, and it's not a new monthly benefit. It's a makeup payment. Money that should have been paid earlier this year, but wasn't due to those technical and data processing errors. Now here's what's interesting. The $875 figure isn't random either. According to SSA sources, it represents the average amount owed to those affected by the underpayment. Though actual totals vary, some people are getting slightly less, around $640, while others are seeing $1,100 or even $1,250, depending on how long the error affected their benefits. These correction payments started rolling out on October 28, 2025 through direct deposit, direct express cards, and paper checks. The rollout is expected to continue through November 15th according to internal SSA scheduling memos. So if you receive SSI or SSDI, especially if you notice smaller KOA increases earlier this year, there's a strong chance this correction payment is headed your way. But before you assume you're automatically in the clear, it's important to know how the SSA determines eligibility. The correction is being applied to specific accounts that were identified through the audit, meaning not everyone will see this deposit, at least not right away, and this part matters if you moved, changed banks, or switched from paper checks to direct deposit in the past 6 months. Your payment could be delayed while SSA verifies your updated information. Now, many of you are asking, why didn't the SSA just announce this publicly? This is a breaking news alert, and what I'm about to tell you is happening right now. Moments ago, a major announcement came out of Washington. A Trump executive order has been confirmed that expands dividend checks to millions more Americans. This is an update no one expected, and it has now been made official, a decision that could change the lives of thousands across the country. Today, we will dive deep into what this executive order really means, who exactly qualifies now for these expanded dividend checks, and how soon you can expect this money to arrive in your hands. Whether you're a retiree, someone on disability benefits, or a recipient of government assistance, this could be one of the most important financial updates you hear all year. So stay with me as I break down every detail step by step. Over the past few years, millions of Americans have been struggling to keep up with the rising costs of living, inflation, and economic uncertainty. Dividend checks, direct payments from the government, have been a key part of relief efforts designed to help those who need it most. But until now, these payments were limited to certain groups, leaving many people who could benefit out of the picture. With this new executive order signed by Donald Trump, eligibility has been significantly expanded. This means far more people are now included and have the chance to receive these payments. It's a historic move that could have a major impact on the country's financial landscape. So what exactly does this executive order include? First, eligibility has been widened. Now, millions more Americans, including additional Social Security recipients and those on disability benefits, qualify for dividend checks. Second, the amount of the dividend checks has been increased to better reflect today's inflation and rising expenses. And third, the government has promised to speed up the payment process so that eligible individuals get their funds as soon as possible. You may be wondering if you're included in this expansion. Generally, the newly eligible groups include Social Security retirees and survivors who previously did not qualify due to income limits. Individuals receiving Social Security Disability Insurance, SSDI, are now included as well. Some veterans and their families also qualify under the expanded criteria. Low to moderate income Americans meeting the new requirements will also benefit from this order. The reason behind this executive order reflects Trump's continued commitment to supporting American families facing economic hardship. It's designed as a direct relief measure to help people cope with rising living costs and financial pressures. By expanding dividend checks, the government is signaling its intention to provide immediate help to those who need it most. Experts estimate that this expansion will increase the number of recipients by millions, injecting billions of dollars into the economy. For many families, this could be the difference between struggling to pay bills and having some breathing room. This money can help cover groceries, rent, medical bills, utilities, and other essential expenses. Government officials have assured the public that the distribution of these expanded dividend payments will begin almost immediately. To make the process as efficient as possible, electronic payments will be given top priority. This means that individuals who have their direct deposit information already on file with the relevant agencies can expect to receive their funds faster, often within days of the payment rollout. Electronic transfers are quicker, safer, and reduce the chances of delays that can occur with physical mail. For those who do not have direct deposit set up, paper checks will be mailed out. While paper checks may take a little longer to arrive due to postal delivery times, the government is working hard to ensure these payments are sent promptly and reach all eligible recipients without unnecessary holdups. Because the number of people now eligible for these payments has increased dramatically, the government plans to distribute the funds in carefully managed phases. Rolling out payments gradually helps prevent errors, ensures systems are not overwhelmed, and allows officials to monitor and resolve any issues that might arise during the process. This phased approach aims to balance speed with accuracy and security. If you believe you qualify for the expanded dividend checks but have not yet received your payment, it is important to take action proactively. Start by verifying that your personal information, including your mailing address and banking details, is current and accurate with the appropriate government agencies. Sometimes payments get delayed or returned because of outdated or incorrect information. You should also use official support hotlines or online portals to check your payment status and report any problems you encounter. These resources are there to help you resolve issues quickly and ensure you receive what you're entitled to. While the process might require some patience, especially given the large number of payments being processed, staying proactive and engaged will significantly reduce the chances of delays or missed payments. Keep an eye on official communications, update your information if needed, and don't hesitate to seek help if you think something isn't right. While this executive order to expand dividend checks brings immediate relief to millions of Americans, it is natural that many people are raising important questions about its long-term effects. The concerns are valid and deserve close attention. One of the biggest worries is about how this expansion might affect the overall economy in the months and years ahead. First, there is the issue of higher taxes. When the government increases spending significantly, especially through direct payments to citizens, it often needs to find ways to balance its budget. This can sometimes mean raising taxes or cutting spending in other areas down the line. Some fear that while the extra money today provides relief, it might lead to higher tax burdens on individuals or businesses in the future. This could potentially slow down economic growth or reduce take-home pay for workers. Second, increased inflation is another major concern. Inflation refers to the general rise in prices of goods and services over time. When more money flows into the economy, such as through expanded dividend checks, people have more cash to spend. This can lead to higher demand for products and services. If the supply of these goods and services doesn't keep up with demand, prices may rise. Inflation means the same amount of money buys less than before, which can erode the purchasing power of families, especially those on fixed incomes. Third, there is the possibility that expanding payments now could force governments to reduce or eliminate other important programs in the future. Budgets are limited, and when more money is directed towards one initiative, it sometimes comes at the cost of funding cuts elsewhere. These could include social programs, infrastructure investments, or other public services that people rely on. It is critical to remember that this executive order is designed to provide immediate financial assistance in a time of crisis. It is a short-term measure aimed at helping families cope with rising costs and economic uncertainty. However, it is not a permanent fix to the complex economic challenges the country faces. Long-term economic stability will require careful and sustained policy efforts, including managing inflation, encouraging job growth, balancing budgets, and addressing the root causes of inequality. On the positive side, the influx of billions of dollars into millions of households will almost certainly boost consumer spending. When people have extra cash, they tend to buy more goods and services, from groceries and household items to clothing and entertainment. This increased spending can help revive local businesses that have struggled, stimulate demand in various sectors, and potentially lead to job creation as companies expand to meet consumer needs. However, economists caution that this boost to the economy must be carefully managed. While increased consumer spending is good for growth, too much money chasing too few goods can push inflation higher, which, as mentioned, reduces purchasing power and can harm those with lower incomes the most. The challenge for policymakers will be to strike the right balance, providing enough relief to support families and businesses without overheating the economy. In the coming months, careful monitoring of economic indicators like inflation rates, employment figures, and consumer confidence will be essential. The government will need to adjust its policies accordingly, possibly scaling back payments, tightening monetary policy, or investing in programs that increase productivity and economic resilience. While this expansion of dividend checks offers much-needed relief and has positive short-term effects on the economy, it also raises legitimate concerns about taxes, inflation, and fiscal sustainability. Thoughtful, balanced policy decisions will be crucial to ensure that the immediate benefits do not come at the cost of future economic stability. Let's pause for a moment and hear from some real Americans who have already experienced the impact of these expanded dividend payments. These personal stories put a human face on the numbers and policies, reminding us that behind every check is someone whose life could be changed for the better. Maria is a retired teacher who spent decades educating children and shaping young minds. Like many retirees, she lives on a fixed income, carefully budgeting every dollar to cover essentials like food, housing, and health care. For years, Maria struggled to afford the medications she needs to manage chronic health conditions. With this new payment, she says she finally feels a sense of relief and security. She can buy her medicines on time without constantly worrying about making tough choices between health and other expenses. Then there's James, a disabled veteran who served his country with honor. After returning home, James faced numerous challenges, including limited employment opportunities and ongoing medical costs related to his service. The expanded dividend payment has been a crucial source of support for his family. He shared that this financial help allows them to cover everyday expenses and focus more on healing and rebuilding their lives. For James and his loved ones, this money is more than just a check. It's hope and stability in uncertain times. Stories like Maria's and James's show us the real-world difference these payments can make. It's easy to get lost in statistics and policy discussions, but these individual accounts remind us why such programs matter. They represent a lifeline to millions who need just a little extra help to get through each month with dignity and peace of mind. To ensure you don't miss out on this expanded financial assistance, it's important to keep your personal information updated with all relevant government agencies. Outdated addresses, banking details, or contact information can cause delays or even prevent you from receiving your payment. Taking the time now to verify and update these details is a simple but essential step. Additionally, regularly checking official government websites and announcements will keep you informed about payment schedules, eligibility changes, and any new developments. Being proactive about your status helps avoid surprises and allows you to act quickly if issues arise. Lastly, sharing this information with your family, friends, and community members who might also qualify is equally important. Many people miss out on benefits simply because they don't know they're eligible or don't have access to the right resources. By spreading the word, you can help ensure that those who need help most receive it. This executive order is a beacon of hope for millions of Americans waiting for financial relief. Stay informed, stay proactive, and make sure you claim what you are entitled to. Thank you for watching. If you found this video helpful, please like, share, and subscribe for more updates.